One of the biggest concerns about getting a reverse mortgage is that it chews up equity over time. Since payments are not required, it's a negative amortizing loan. The interest in the mortgage insurance incurred each month is added to the loan balance, so the loan balance grows. That is different than a conventional mortgage where a principal and interest payment pays down the mortgage balance over the term of the loan. Equity is still very likely to grow. Let's assume that the value of the home is going to increase at a 4% rate, which is the historical average since President Kennedy was in office. The amount that could be borrowed under a reverse mortgage is about 50% of the value of the home, but is dependent on age and interest rates. If the loan balance grows at 5% interest rate, including the mortgage insurance, the result in the example is the value grows faster than the amount added to the loan balance, maintaining a consistent margin of equity. The net result is a senior homeowner can effectively take out the increase in their home value monthly and live better. With each analysis, we provide a projected amortization schedule reflecting your individual plan all the way out to age 99. So the big numbers are discussed up front and well understood before we move forward at all. Anyhow, love to talk to you about it. Give me a call. Thanks so much.